All right. Good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. It is Monday. Happy Monday, November 4th, 2024. We are one day away from tomorrow's election day. Went ahead and did an election day podcast. If you guys want to check that out, that is on Spotify and on Apple Podcasts. Just search GAR Capital and should come up. It was about a 30-minute podcast. Went over all of the scenarios, what sectors to look for, which candidate wins in terms of what sectors will perform depending on which candidate wins. Again, no political prediction on there. Your guess is as good as mine, as I said. We'll see what happens tomorrow, even if we get a result tomorrow. Maybe we don't. We will see. But for right now, you can see how the futures are reacting at the point of we don't know what's going to happen. That's why we're probably going to be flat today and flat tomorrow. Dow futures are down 42, NASDAQ down 22, S&P is flat. Russell's down 0.13, Flatsville. 10-year treasury yields are down 4.281%. Dollar index 103.69, flat. The VIX is up about 3%, but nothing too wild. Crude oil is up. OPEC was talking about possibly delaying production cuts. So again, that's up 3%. Wish that happened on Friday, obviously. Gasoline futures up 3% as well. Gold is up 0.22%. Silver is up 0.64, copper's up about 1%. And last night I was watching the dollar yen. It did bounce 151.84. It's down 106 pips. Bitcoin's down 1.11%. Ethereum's down 2.43% this morning. So to be quite honest, it's going to be the first 2 days of the week might be difficult because it is going to just be based on the election. Thursday, we do have the FOMC. The Federal Reserve is going to decide if we get a rate cut or not. The CME group that does futures, the Chicago Mercantile Exchange, that's the acronym, they are expecting 100% odds that we're going to get a 25 basis point cut. So let's go ahead and assume that. So with that being said, we can see that this is how the market is pricing that. But more than anything else, it's going to be election anxiety. We could be getting a lot of deleveraging from hedge funds, mutual funds that are trying to see, hey, we don't know what's going to happen in the election, so let's not bet on a horse quite yet. So again, anything could happen, but that's kind of the area that we are in. Let's see. Asking some questions. Here we go. Tara's asking, if you're okay telling us, do you think Trump or Harris will win the election? Yeah, I'm okay with telling you guys. I just really didn't think that you guys really cared. Because listen, I don't think that I'm that influential. I'm not that special, guys. I just love doing what we're doing, talking about the markets, answering questions. Who do I think is going to win? I think Kamala Harris will be the next president of the United States. That's my pick. Are you making election trades or not? No election trades. Listen, I remember 2016 and how volatile that was in terms of the S&P and the dollar yen. And then 2020, because of the possibility or the allegation of voter fraud. So the market was like, whoa, what are we doing back and forth? So I think the best thing to do with an election is to sit back and watch. When the dust settles, think of it as earnings. Just wait for the reaction, and then we'll see what we do afterwards. We don't have to do it ahead of time. We don't know. Unless we have a lock on who's going to win. I don't. I just have a prediction. Doesn't mean it's fact. Who knows? Then that's what you base it on. But no, I would not gamble ahead of the election. Absolutely not. Good morning. Good morning, Anthony. Thank you for being part of the Morning Note this morning. I really want to focus on answering some questions, so I'm going to go to Instagram right now. Here's the question. What candidate do you think will be better for the markets in general? That is a very good question. I'll answer it like this. Trump wins, we get a shorter term, sharper move higher. So for the shorter term, Trump is better for the market. Longer term, it would be Harris because we've already seen kind of how Bidenomics and the Democrats' economic plan has come to fruition. CHIPS Act, infrastructure, for example. So we are near all-time highs. Can't say, Democrats are bad for the market or Republicans are bad for the market. Market is the market. We're really just pricing in what is the potential tax code. That's what corporations are looking for. Donald Trump wins. Obviously, we'll get a nice shot in the arm in the market because taxes will be lower. And if Harris wins, who knows what the tax policy will be? Maybe obviously higher. She will allow the Trump tax cuts to be expired. But like I said on the podcast, again, it's all about Congress. The House of Representatives is where the money is. That's where money and legislation starts. The president can only submit a budget. Unless it becomes like military issues, military aid, that's where the president can do his own thing because he's the commander in chief. But like tax code and tax law and tax breaks, that's only the House of Representatives. They have to approve that. So watch the House races. If the Democrats win back the House, then obviously you see the market take a little bit of a tumble. If the Republicans do hold the House, then yeah, short term, we'll see the market benefit. Absolutely. Let's see. Question here is Crocs. All right. Good old Crocs. All right. They had earnings pulled back. Anywhere near support? Yeah, right around 103 on the daily, but it just crossed below the 200-day. Not good. So you have an earnings gap here at 129. If you're looking to short, really, you got to break below 100, and then you can probably get down to this gap fill here at 91. Not much to go by there, but below the 200-day, not the best look. But it was because of earnings. I didn't read their guidance. I don't know exactly what they reported, but you can see the market is not exactly cheering it at the moment. Let's see. Good morning, Carlos. Which sector or stock is best to short during election times? I wouldn't touch during an election a trade because anything can happen. So you have to understand that your risk is way skewed higher in terms of, again, Lucky Bamboo. If we know who was going to win, this is a different conversation. But when we have a 50-50 coin flip, tough. You're playing roulette. And again, as much as I love Vegas, this is not a gambling channel either. There's no edge in roulette. There is no system that works. It's just get it right and predict it correctly. So in terms of which sectors will be best based on the candidates winning, I talked about that on the podcast. Here, I'll give you a little bit of my notes. Here we go. So for example, I'll start with Harris. If she wins, weapon manufacturers will be benefiting. Home builders, clean energy, tech and semiconductors, China stocks would benefit. Under a Trump administration, banks would move higher, energy would move higher, crude oil, Tesla would move higher, social media companies will move up, small caps will boost, and Bitcoin will boost. I give more of a detailed breakdown on each sector on why I think they will benefit based on administration on the podcast. If you guys want a link to the podcast, make sure to go to our Discord. Let's see if I can find it here. Let's see. Let me go ahead and scroll. There we go. All right. If you go to 7:13 p.m., our live market blog, it's right here. So just click Spotify. It'll come up. And there's also Apple Podcast as well. Good morning. Let's take a look at Lulu. Lululemon. Wow, look at that. Had a nice, at least since July. Do we have any gaps to fill? No. Guess we got to get above 336 first, but it is a nice breakout. Is it pulling back? No, you're good. So 336, that's your 200-day. If we can get above that, yes, I think Lulu might be getting a little bit of Christmas love ahead of the shopping season. Crossing the fingers that Lulu has great sales on the holidays. Prices might go down. Who knows? Bigger, deeper discounts. This may be a pullback as well. But again, that 200-day moving average at 337.11, that's going to be the key. That's going to be your pivot. You want to wait for that break before you do anything. And again, all about, you could be bottom fishing as well. You could be saying, hey, I want to get Lulu on the cheap. Fair enough. But if you want to do it as a trade, I think breaking above that major moving average would be key. Hi, Carlos. How about Mara and BITO? Let's start with BITO. BITO is not one for one with Bitcoin, unfortunately. It is the Bitcoin ETF, but it does not move like Bitcoin. This is Bitcoin futures, quite literally the futures contract of Bitcoin. Are we seeing a disparity here, class? Yeah, a big one. So with all due respect, we have traded BITO before. Let's wash our hands from that. They don't work. I mean, yes, Bitcoin goes higher, BITO will go up, but you could see the price action is not the same. So let's move to Mara. Now, Mara, you can see that's not the same either. Above 2002, we can talk. If Donald Trump wins the election, stay long Bitcoin. If Kamala Harris wins the election, buy the dip on Bitcoin. It's very simple. Bitcoin is going to move higher regardless. I don't care if Elmo was president. It is a finite asset based on dollars, which when the dollar will fall in value. Period. End of discussion. Think of it as any other commodity. But Bitcoin, again, finite, can't make more. All you have is the halving. So again, price will be based on demand. If Trump wins, yes, obviously the demand will be higher. Short term, again, we will see. But Mara to go long, anything above 2002. That would probably be the level that we're looking for. Morning, any move on Snap? This is Snapchat. I have an alert at 1755, double top, was possibly looking at an inverse head and shoulders, didn't get there, got a break higher with a gap fill. If we can get above 14, maybe we can start looking a little higher, but we're right at the 200-day as well. So again, we want to break that, kind of like what I talked about or spoke about with Lululemon. So 1402, maybe it'll give us a little bit of an idea of what's to come. But until then, I don't see anything on Snapchat at the moment. Let's see any other questions on Instagram. I'm going back and forth. All right, Matthew is asking, I'm liquid for around 40 right now. What ETF, industries, or type of diversification should you be looking for? And I'm 27. All right, Matthew, thank you so much for being here. 40K, that's I think is the assumption. I think the best thing you can do is buy the S&P 500. And what's great about that is that, it's an ETF that pretty much beats every other hedge fund out there for the most part. If you're trying to find what specific industry and you're just trying to go sector-wise, that's fine. Again, I would assume the best route to go is to invest in a sector that you feel is going to be the future. I've noticed that when people are told what to invest in, they're less likely to hold. And it's about time in the market, not timing the market. Yes, I love trading all day, but when it comes to investment, leave it alone. Don't touch it. The more you trade it, the less likely you're going to make money. You buy S&P, forget the password and leave it alone. And let the interest compound, let the dividends reinvest, and you can DCA. But in my opinion, for a 27-year-old, you can be a little more aggressive. Maybe you can buy some growth. You can do SPY-G as for example. But S&P 500, I would say keep it simple. 40K, that's your base. That's your foundation of your portfolio is an S&P 500 fund. And then you could start having a little fun. But the idea is to build a good solid foundation with the 500 best companies in the United States. And again, the S&P 500, as we know, over time, over a 10-year period, has never lost money, ever. 5-year period, yeah. 20-year periods, never lost money. I'm sorry, the 10-year periods, yes, I think there was a 97% profit rate if you hold the S&P 500 for 10 years. Yes, things happen. But yes, that's what I think is the best move for you. Palantir puts for this week. So Palantir does report this week. I talked about this on the YouTube video last night. I said that if we do break below 40, then possibly 34 would probably be my next level of support. Kind of tough here because we are pricing in a lot of good things. The CEO did sell some shares. So again, this has been a stock that has been absolutely on fire. It's based on what else? Artificial intelligence. So let's put in some RSI and see where we are in terms of either overbought or oversold. You're right in the middle, 50. So you're not overbought and you're definitely not oversold. So this seems like a flip of the coin. Gun to my head, you're telling me what I think is going to happen. I think Palantir pulls back. That's just me. I was thinking of that, putting around 15K and then $300 to $500 a month into the S&P. This is from Matthew. I think that's an excellent idea, Matthew. Again, your personal finances, you know what's best. I just think the S&P 500 is a really good foundation for your portfolio. And for anyone's out there, just stick with the best. Think of it this way. S&P 500 is betting on America. And as we know, you bet on America, more than likely you're going to win. There we go. Let's see any other questions. Okay, we'll wrap it up here. Quick view and opinion on GME. All right. Above 28, we can talk, I guess. It's hard to kind of capture a squeeze before it happens. This is kind of like a shooting star or a comet. Not easy to catch. But if we get above 28, hey, maybe there's a little something. Keep an eye on the options volume. If anything stands out, I try to, but nothing on GME as of yet. Good morning. Apple. Let's see. All right. Apple is one stock I am watching this week. A break above 225.40. I was actually looking to get into that on Friday. Thankfully, I didn't. We chose Boeing calls instead. Thank you, Nick, for that one. 225.40. If that breaks, yeah, we can talk about recapturing the 20-day at 230.40. See where my cursor is. But if this does pull back like we have seen with Apple, you can see these kind of flag setups with breakdowns. 219 breaks down, you can target 215. That hits that second level of support right around 220 is that level, first level of support. 214 would be next. And it will not be easy to short for the fact that this is Apple we're talking about. And now we have the elections coming up. So who knows what's going to happen? So I would wait until after the election. Do you think the S&P or Berkshire has better upside long term? The S&P. And nothing wrong with Berkshire Hathaway. Very profitable. But the cash that Warren Buffett is stacking, every day he has it stacked, he loses the possibility of gaining on the stock market. I mean, he doesn't have every single stock available. I mean, remember, he sold Apple before it hit all-time highs. It happens. I mean, Warren Buffett has his way of doing things. And Berkshire Hathaway is extremely, extremely strong. Great balance sheet. They sold off some more Bank of America stocks, sold out some Apple, and they're raising cash. Warren Buffett's company has more treasury bills than the U.S. government does at this point. So you could tell they got some deep pockets. But the S&P 500 adjusts for growth a little more because we have weighted averages. So like an Amazon, a Meta, an Nvidia, Tesla, all those names that Warren Buffett is not exposed to, for better or worse. That's why the S&P gets the edge. Are you still buying SPY-G periodically? Yeah, of course. You know, the idea of savings is that you don't think about it. You just leave it on autopilot. I have been DCAing into my Roth. It's been ripping. Good for you. Use the Roth IRA to save money on retirement, for retirement. It's after tax dollars. You could buy SPY-G, you could buy SPY. I just think by buying the S&P is just having the foundation. And really investing is more than anything else, time and discipline. Just the easiest way to do it. DCA, invest in what you like, fine, and just leave it alone. Just don't even think about it. Just be like, yeah, it doesn't matter. You're not going to cash out tomorrow. You're not going to do anything with it. Just lose the password. Really, literally the best way to do it. And we'll go ahead and wrap it up here. Do you think the stock market will crash soon? Will there be some signs right before it does? The only way I would say are two ways that the stock market crashes. Number one, we have some kind of global war. I don't know if that's going to happen. Number one, I don't know. It could be. And number two, we would need the labor market to absolutely collapse, meaning we need mass layoffs, people not working. But that's not the case. We had a positive NFP report this week, but it was less than expected. Remember, there is revisions the next month. So people are working. Can't really say that we're getting to the precipice of a crash. Are we in kind of a bubble situation? Yeah, there's always a bubble being made. That's never ended, always. Timeline for buying dips would be over a 6-month period. We'll want that money to work as soon as possible. Great job, Matthew. Yep, good idea. And okay, I'm going to go ahead and end it here. It's 9:20. All right, team. Thank you guys so much for watching the video today. Thanks for joining me live. Instagram and YouTube followers, appreciate y'all. We'll go ahead and leave it there. Have a great rest of your morning. I will see you guys on the live market blog on our Discord channel. It is scrolling at the bottom. Have a great rest of your Monday. Cheers all.